Afternoon all. This is Fari Hamzei. It's 5:12 p.m. on Wednesday, August 24th, 2022. I'm sorry last week I was not doing well. I've had issues with my psoriasis. It doesn't go well with long COVID. And my oxygen had dropped and panicked everybody. And I was arguing with the doc so I can go home rather than go from urgent care into NCH hospital. And we all know what the hospitals are down here. The filter rim, you can go in pretty healthy and come out in pieces. So I wasn't going to do that. Of course, it's a CYA. It's their license. And they're trying to tell me this and that and so forth. And I didn't need to get a lawyer involved, but I was about to, almost. But I reminded him that how much I've helped him on his portfolio. So that I'm not here to argue with you, Doc. That's an order. Yeah. I'm not good at asking people what to do. I issue orders. And I'm not going to hospital. So anyhow, it just, a little recovery on my own. They gave me 3 days of rest. And I'm good now. I feel great. Did okay yesterday. Today I killed it. Tomorrow's another day. We'll find out. But anyhow. PMT will have an issue going out. Maybe tonight, maybe tomorrow. Depends on the chart here. I'm going to review that, show you. But we did get all the 4.67 out. And the next piece of the puzzle is HA options. But Nancy and Cash are working on that to get all the performance done. So we are caught up. The whole MNQ, NQ system set us back effort-wise because at the end of the day, it's a hub and a spoke system. Everything goes through me, and I'm trying to separate that and get more people involved, and it takes a little bit of time so that cannot be repeated, and we can be going on all fronts all the time. But I think we're close. As we get to this new quarter, post, let's say, high Jewish holidays, which is, you sell on Rosh Hashanah and you buy on Yom Kippur, which I believe this year is September 25th. Monroe can correct me if I'm wrong. September 25th is Rosh Hashanah. October 4th is Yom Kippur. That's usually is the low, and that's what I'm projecting now for cycle low. So we dropped a couple of good days, and we'll see how things go forward on that. So just one last housekeeping item. Tomorrow, open house. Come in here to here. You click on members, and this is the link. You don't need to log in or anything. It's open house to everybody. You can come in, and it takes you to the chat room. The chat room we're using is a GoToMeeting. It's not GoToWebinar, so it chat a little bit easier, and you'll see exactly what we're doing in that room. The system will run automatically. First trade is at 9:45 Eastern. So if you want to be in, I suggest you log in about 8:30. Okay, it says so. It's always here. We always update these, and unlike this webinar, we register for the ORB open house is a free day. Nothing is needed from you. Just first name and last name. No initials. We'll kick you out if you're using initials. Why? We have to comply with CFTC and SEC. I don't make the rules. I just follow it. And I'm not going to allow you to risk the website or the chat room. So if others are doing it, you need to be doing it too. Very simple. Very simple. No ifs and buts. As you know, I come from military industrial complex. I don't take prisoners. We'll do it my way or we don't do it. Okay? That's for that. So that's tomorrow at 8:30. I have nothing else to report. Oh, we have a little problem on this. We're looking at it. When we click this, you should not go to that. There's a problem there. We found it could be because of the different updates we have. We have turned off something by mistake, but it should be done by today or tomorrow. Remember, it's a website. There's a lot of people involved. There's a lot of work involved, and I just can't fix everything myself. I just don't know certain things. But my CTO tells me within a day or so it should be finalized. He knows what's wrong, so that's good news there. Again, HO options will be updated, and PMT is coming back. We do have a bias that went out Sunday night. We have not put a trade on. I want to stress to you guys on PMT. I found that to be much more beneficial, not to make a bias change and put a trade on, Trade is more sensitive than a buy exchange. So when we see, for example, here, I'm going to show in the chart too, that we dropped, this was Friday, we dropped big time Monday. We went in Friday close or Sunday after evenings because it usually Monday, Friday close. That was a big day, but look what we did yesterday and we're up now. So I think we're ready. We're ready for putting the trade on. Could be tonight, could be tomorrow night. Let's see how we go. Okay. Will be full blown, full issue, all charts, all commentary, and the trade. And 3 or 4 emails. You'll get it. You'll see. The emails come from Admiral Tico. He's my XO. He's my executive officer. And what Admiral Tico says goes. Okay? He's a Navy dog. He doesn't joke around. So, but be aware. Be ready for it. It's Admiral Tico at HamzeiAnalytics.com is his email. Anyhow, that's slated for either tonight or tomorrow. Depends on my time. I made some headway this afternoon on MNQ. We will have to post that. By that I mean, this is our trading results. We have to post these. And MNQ does not have his own drop-down menu yet. There aren't too many people in it, but there's a link here. But you would click here, it had problems. We got it fixed. Okay? And also, we're including the correct margins now. As you know, the margins have changed. And so you have to keep track on it. And you could see on a margin of 1238, it made 16,000 for trailing 12 months. Very, very robust system. About 500 trades, 450 trades, something like that. 497, 500 trades. So it's not one trade. It just boom, boom. It slugs through it and hits singles and doubles and goes forward. So, but as we get now, he's got good months or better months, and maybe 1 month a year get into trouble. This year we got into trouble a little bit in July. We got bigger trouble in February, but that's you can always complain that to your comrade Putin. Okay, I call him comrade, yeah, because I'll call a bunch of people comrade. All those who are of his ilk, yeah. But that's what that is. But when you get into a fall, it's slim pickings. It's just last year people saw that. People saw that last year. It was just wild because volatility opens up and this thing grabs it, and you make on the 3 NQs was making 4, 5, 6,000 a day. I know we're underpriced this, but I rather promise small and deliver more. You don't want to be on the other side of it, that equation, but promise a lot and nothing shows up. No. So, and then that gives you buffer for the month you have trouble. I suspect, now, we had suspected we would have a problem in May. Okay? Historically, that's a problem comes usually in May for this type of a system, which is trend following. But this year was different. This year, the problem was in February because the volatility just went way out. Listen, ATR was hitting 80, 90. When the ATR on a 3-minute chart using 7 bars, look back, it's 80, yeah, something is wrong big time. Okay. And nobody knows what they want. They're all panicked, and you get a very hodgepodge of trading. But and then July, we just had a small little losses back to back. That's because what? The summer has come back. This is the new normal. And August has been a little bit slow too, but we had better results in August. But we had no data to test that. Why? We get 2 years of data. I know I've said this ad nauseum. 2 years of data tick by tick. You need to get tick by tick. Usually you get about 6 months. But I have a special account with TradeStation because I've been a solution provider, I don't know, for some 25 years. So I get a little bit more data, but no more than 2 years. 2 years ago this time, still was 2 summers of COVID. So now we're getting data where we're cleaning up our act, looking at it carefully for next summer. Okay? So that's what we're at. So why don't we start our normal procedure here? As you know, we always start with economic calendar. Okay. Okay, we did have home sales today. That was a green report. And we have durable goods. Let's take a look at it quickly. Now, I don't prep these. I don't come here and be a marketing guy and review things, have a script. I don't do that. I just come in just with like you are, because I think that's more natural. and more authentic. And then, I'm transparent. If I make a mistake, I make a mistake. I'd rather do that than try to finagle and try to look good. That's not, as you know, that's not where I come from. I don't care about what I look. I care about what my machine does. Okay, new orders, 1.9 prior. Revised up, 2.2. Okay. Remember, that's for June, because the report is for July. So that was a prior period. Consensus was 0.5, we came 0. Okay. So hold on, Jerry Powell. Yeah, this is not that strong. Yeah. 0.3 on the expedited transportation month to month. Consensus was 0.1, we came 0.3, a little bit better. Okay, so there's a mixed bag. And core capital goods, 0.5, 0.9, again 0.4. Okay, no consensus were available. All right. Listen, I think we're going through that peak inflation period, but I think you see it in the market first. The economy will probably take a couple of quarters, just the way things are. Yeah, remember that cycle. Home sales. Now, as you know, I've been very negative on this since October, before even Fed started tightening. But then again, I had to deal with a couple of two clever guys down here. They think they know something because they built a couple of houses in North Carolina. Yeah, right. What they don't understand is that you need to be sort of Richard Roll to understand term and structure of interest rates. And if you look at that, you know this time it's going to be a little bit different. Yeah. So we had 8.9 month to month, 8.6, I'm sorry. The was even lower. Consensus was negative. We came a little bit better. Not bad. Not bad. Okay. As I said, the brunt of this pressure came in June and July. So we moved up a little bit. Yeah, this was June. You could see it, 8-9% almost. I don't know what the index is, so not going to go there. Sorry. I don't know everything. This I know. Hold on. Tomorrow, as you know, Jackson Hole starts, and Jerry Powell, we're going to have a talk on 10 o'clock. By the way, on 4.67, we're adding a module for what's called Big News Days. Now, yesterday surprised us. We haven't backtested it yet, but allows us to trade post this number. See 945? Because our first trade is 945 for the system, for the NQ system. This allows us to delay that a little bit. So you don't put a trade on and the news comes, and then 5 bars after another one comes, which is even more bigger, more important, the new home sales. So this allows us to turn that off. Now, yesterday, it turns out we actually lost money a little bit compared to if we had run it by itself. Again, that was visual. We have not done a full back test yet. So I call it anecdotal, not statistical. But we'll get there too. We're a few days away from a basic version of it to be available. I've got a bunch of guys who are very avid users of this. Will be beta testing it for me. We'll get some feedback, and then we'll release it again. That will be called 4.8. 4.67, no, I'm sorry, would be 4 points. No, I'm sorry. That would be 4.7. 4.67 was strictly dialog boxes, and we were fixing an error we had. Again, it's our user in a user guide. We'll remind you tomorrow, not a problem. All right, let's go tomorrow. Tomorrow, big day. Obviously, every Thursday we have jobless claims. Should be around 250, 240. Let's see what that is, what the expectation is. And I always I learned from a couple of market timing guys that I used to hang out with in what's called Playa del Rey. There was a whole enclave of them there. It still is. Some retired, some passed away. But it's not what the number is. It's how the market reacted to the actual number. So here's a consensus. What we're looking for is this column and what the market did. So it's two-dimensional problem. What an actual number came and what the market did. Okay, we wouldn't know until after the market, but at least you have a sense where we are. Okay, these are very, very tame, very normal situation. Given the non-farm payrolls coming in, there's no recession. I mean, that's BS. That's talking heads. Anybody with IQ knows there is none. You cannot create these many jobs if you have a recession. Now, we have shortages. We have inflation, shortage of jobs, because we have 11 million jobs on jolts. So, and part of the problem is H1 visas. They gotta fix the H-1 visas. I would lock up the southern border and open up the H-1 visas. Look what Canada does. Far more civilized. Yeah, you want to come in? Let's see where you went to school. What's your GPA? What do you know? Does it fit what we need? Then you let them in. So we're screwed up. Hey, you're lucky I wasn't born here. Yeah. I would fix this thing so fast. You won't know what day it is. Let's go to GDP. I still haven't talked about that on Chicago. The days I was on the radio program, non-stop the lights were lit on the phone lines. Yeah. Anyhow, but those are good old days. That's before all this mess. Way before this. Remember, I said in like 2012, 2013, that we're going to have problems from 2015 on. Part of the problem was national debt and demographics. It's one of the webinars. You can go to the website, take a look at it. I predicted all this mess, but not in this detail. Remember, I'm just like Nostradamus. I can't tell you exactly what happens. Nobody knows the future, but I can tell you, based on my own innate ability over the years of being in strategic forecasting since 1978, you learn what things to look for and read out of the box. And I knew back then, around 2013, 2014, that come 2015, 2016, we're going to have problems with that. Unhappiness of people, which is national debt is raging on, and you have demographics that's changing. So, and you saw the results. Hopefully we'll come out of it. I don't think we're there yet. Just be practical. Okay, GDP. Okay, wow, that's a huge wide range. I don't think it's going to be positive tomorrow, but could be on the higher end of the range, of this range. So maybe 0.4, 0.3, we'll see. That's my feeling right now, but what do I know? Okay, so that's what we're looking for tomorrow. And then what do we got Friday? Trades. Okay, let's look at trades. Okay. 98.2, 98.6. Okay, a little bit worse. Remember, that's a negative number. We're expecting a little bit better. Remember, it's a negative number, so it's smaller. But look at that range. Oh. Okay, that's another one to look at on Friday. Personal income. Yeah. Fed looks at that quite a bit. Wow. Yeah, PCE is a big one. Actually, with used to be with. Actually, I'm sure he does look at it still. Bernanke, Dr. Bernanke. Yeah. That was his thing. PCE. Yeah. Personal consumption expenditures. This stuff is not good, guys. Wow. This could be a creative bump on Friday. Okay. We'll probably take a position on tomorrow with PMT then. Either tonight or tomorrow. Depending what kind of time I have tonight. Remember, I want to do a full charts and setup. I don't want to do shortcuts that Nancy was doing because I was under so much pressure. Okay. We did get the trades out, but some of them were not even reflected on the website. They were done by email. I don't want to do it that way. I want to go back to the way we used to do everything. Where there's a it shows what exactly we did, shows our opinions that we sent to Time and Digest, so on and so forth. I want to have a regular newsletter like we used to. Now, look at what's happening there. We have 2 10 o'clocks there. So on Friday, we're also going to use what's called the Big News Day module for the ORB, which allows us to come in a little bit later. Maybe we shouldn't go like us as deep as 10:09, but maybe 10:06. We'll see. 1 bar sooner, but we'll see. I'll take a look at it. Here's the consensus data for consumer sentiment. As you know, last month this was important. We're at 55.1 and 55.50. Not a big change, but we'll see. Yeah. If you look at the retail sales and the retail analysts, sometimes I do. They're seeing the consumer pretty avid out there, and there's a talk also that we're going to have an early Christmas season. Hi, Siamak. How are you, sir? Welcome. That we will have early Christmas this year. If that's the case, then we should be seeing that in the consumer confidence. This is a big input. Okay. I went out with a girl who was involved with a major restaurant chain. This was the number she would look at, no matter what's going on. She wouldn't know anything else. She wouldn't know about non-farm nothing. But hey, Fari, where did that number come? And hey, I'm middle of the trade. I don't care. What was that number? Yes, boss. I would read it to her, and so on and so forth. So to a lot of people on the retail side, this is crucial. All right. Now, retail people I'm listening to are saying, retail analysts, they're saying that they're saying, they're spending. Consumers are spending. Some is on debt, some is cash. Remember, we've had a little bit of upticks in salaries, and we have a very, very high, very low unemployment. So we still haven't filled all the jobs, but that's causing the wage inflation. That's what that problem is. So, are we ahead of the inflation? Is it behind us? I don't think so, but we're close. We're close. I mean, you'll see. Tomorrow data is going to be absolutely crucial on that. I think we will get the September data in, so not next month, but October data. That should clear where we are, in my opinion. Because August means nothing. It's the September that matters. And if they're going to hit the Christmas early, you're going to see it. You're going to see it in deliveries. You're going to see it on the toys, the clothing, the electronics, that kind of stuff. So we got a little bit more to go to figure that one out. Okay, having done that, let's go to charts again. Timer charts. Okay, as we discussed before. Sorry, I missed the webinar last week, but week before that, when I had the last webinar, you saw we were in the channel and 200 bar, above 50, below 200, like clockwork. Bada bing, hit it. That was here's what happened on Thursday. I got here, I wasn't feeling well from the dock, and just really straight to bed. I get up and we're down. I said, oh, geez. Remember, we can't get in past certain time. Once you pass the timeline for time and digest, you can't. It doesn't matter what you get in. So I got in Sunday night, which gives me the Friday close, and big, huge on Monday morning. Small day yesterday, and a little bit of uptick today. Okay? And you could see advanced decline changed. Those are two key inputs to McClellan oscillator. As you know, this was a big warning for me. Huge McClellan oscillator reading, huge breadth thrust, coming in and still in the channel. By the time you get to a second one and you get a divergence, it's a dead giveaway. Look at this divergence. High, lower readings. It's not rocket science, guys. It's some charts. And just pay attention to the details. Also, our venerable CI made a cross. So look at the timing there, right there. 2 bars after it hit the 200-day. Now, a lot of people were telling me, oh, we're going to punch through this, and especially the warehouse bulls, that we have a rendezvous with destiny. We're going to go and test the new highs. I wonder what they're saying now. So, anyway. Frankly, I haven't heard from some of them. So they get the newsletter, but I post on Twitter. So anyhow, it's where it is. Sometimes I'm right, sometimes I'm wrong. I'm not always right, I'm not always wrong, but it is what it is. It's a guess, but it's a best guess. Canaries. Okay. Yesterday was a tough day. On Monday. Well, I'm sorry, not day before yesterday. This actually did not move enough. I don't know if you realize or not. We dropped 92 handles on SPX. The ratio is about 10 to 1, normal ratio. The ratio could contract or expand based on which name is under pressure or trading against the trend. Whatever, because remember, this is arithmetic average. That's why I don't like them. I like the market cap weighted market cap indices. So that Apple, even though it's trading at hundreds, has more value than the 130 or 120 that IBM is trading. So, or Boeing is trading at like, I don't know, 160, 180, whatever is that. So that should have been about 1,000-point drop on the Dow, equivalent. Well, I think we dropped about 600. So this had some work to do to catch up. And you probably saw some more of it yesterday, and we were in trouble early this morning, and here we are. Transportation has pulled back up. but you see the failures earlier at 200-day. Okay. Same problem here. Again, we can't go up on SPX without support of transportation. We can't go up on technology. I mean, on the NASDAQ without support of Russell. There's some names that are shared there. And this is Russell 2000, and so small caps. And look, they struggled. They pulled back. Look where they turned. They turned back in November, where the highs here came in January. So they usually lead. Look, this one. The lead here was, of course, I think that's a data error, or maybe there's a name they haven't figured it out. I haven't figured it out myself, but that even was November. So they always lead. These two always lead, and until they pull up, I'm not going back there. What we had here was a dead cat bounce, and it was plain and simple. You could see. Remember, I talked about back here about 4th of July. I was off by 2 weeks. That was a low. And then we start buying. And as a matter of fact, one of our best buys here was Amazon at 101. And we just dumped them day after that, last week at 142. 42% in a month and a half. Not bad. It was for the few affiliates. They were cash items. We bought that first. Then we bought the options for the option room. We will never front run. You know why? I don't need to. Life is good. We have plenty of stuff that's working. Why do you want to mess around with something that can get you to hot water with the federales? You know, when they do this at 6 in the morning, it's usually not a good sign. So, anyhow, so no front running there, but we're happy about that. As a matter of fact, full disclosure, Monday morning, okay, we dumped the followings. Hold on. We dumped half of Apple, all of Texas Instruments, all of Amazon, all of ADP, all of Boeing, and another name which is very small, ChargePoint, which was a Nancy had idea. These were cash and options. We dumped everything Monday morning. So, why? We're going to buy it back October 4th. If I'm right. If I'm not right, then I'm not right. So, okay, let's go to the trender. Again, this is used for money managers. You want to see what they're looking at? And basically, it's a rubber band effect. You want to see how much the rubber band is stretched. When you see it like this is a dead giveaway, guys. You see that? Yeah. So we now this is inverted. The price went up, but this didn't. Still, you got a bullish divergence, and so we rallied pretty strong. Hit our 200-day pullback. Just same thing happens here. I would suggest you guys look at Russell. This is a key item to look at in this perspective. Long term, 3-4 years, and you can see where the rubber band is. Okay, especially 50 bar and 200 bar. The trender is the price difference between current price and 50 bar and normalized. You have to normalize it by percentage. And then otherwise you got apples and oranges. And then same thing with 200 days. Okay. These will be in the charts. These will be in the charts issue. All right, SP1 Momo. All right. No, we do not share our simple trend following system, these two. Why? They're too simple. And it's easy to make a mistake. And it's going to be more headache. Okay? I'm not going to be there and try to fix that and so on and so forth. I'm too busy. And I've worked very, very hard to get to this point in my life in terms of what I'm doing and where I live and what I do and how much work I want to do. I'm basically on a royalty model. You know, the website, the indicators, the book, the models, and so forth. So I'm not into, getting to huge conflicts and back and forth issues. And these two are one of those types. That is, if you don't know what you're looking at, you can't just use it mechanically. All right? And but basically, it's like a super indicator. We're sell on the long term still. The weekly is on the sell. Now, albeit it's getting close to be invalidated, but the short just went to sell. So we were short and short. Okay? Now, look what's happening down here. We built up some new highs and it died. I wasn't expecting the new highs to be that big yet. Why? Because we just came in from new lows. Okay, but the new lows tell me we have a low coming. New highs said, even though that's a little bit low, maybe we have a new low, and there's no evidence here yet. Keep that in mind. But I expect the low to be worse than what we had before. I expect us to go to my earlier number. Remember in February, I put a 200 to 1 ratio of trade? Some people, you got 5 to 1 out of it. Okay? That was a 200 to 1. Nobody expected to go there. Nobody. Okay? But we got 5 to 1 out of it. 500% in about a month position. But that target area was what? 3,800 to 3,600. Look where it's coming, showing up now again. Except it happened much later. As a matter of fact, February is when this is that day we dropped. But we dropped so hard that the position did not go to 36, 38, but we made 500% on that return. Here is a different problem. I think we're going to test this, and it's going to be a tough one. We'll see. I may be wrong, but that's what I'm expecting. That we take these out, and then I'm willing to buy, and then rally for, Christmas rally, Santa Claus rally into the close. I think earnings are going to be a little bit better, comp-wise, comparable-wise. But the third quarter is not usually a good source of good earnings anyway. And now, where we are now, I think it's setting up that setup. We shall see. Anyhow, we'll keep watching. Momo and SB1. Beautiful, beautiful signal. Beautiful. You couldn't ask for a better one. You couldn't. Higher high in Momo. I mean, say SB1, and Momo said, "Oh no, I don't think so." And bada bing, you see how we dropped. So you gotta trust your indicators. Call was right. We were patient, and we got it. There was a talk earlier that I should get out earlier when we're in that mess. I said no. I'm going to wait until 200 day. Why? I'm a stubborn son of a gun. So sometimes you have to. Now, that doesn't mean you can do that day trading in Q futures. Don't get me wrong. I'm talking about cash and options. Okay, very different animal. Why? You're trading NQ and MNQ. Your leverage is 49 to 1. That sharp knife on your neck is not going to let go. Like yesterday, I was so far ahead. I gave, 80% of it back. And then I lost a little bit on the commission side and just walked away. Today, I cleaned their clock. So, not because it was up. No. But you got to realize, I did not trade Friday. On Monday, it was such a mess here. Plus, I was at courts. I had to solve that stupid traffic court issue. But that's a separate issue, separate discussion. Okay, so what do we have on SQ? SQ, as you know, is a tail risk of S&P 500 put options, not puts and calls, just put options, downside. We pulled back. So even though there was a slight signal here, I don't count it. Why? It's too low. 131, just barely over, not even mid-range, the new mid-range, okay? Let's say 110 to 170, that's 60, so it would be 140. We didn't even make it to 140. Remember, design limit for this was 100 to 150. It only was good while they had the PDF ready. Post PDF, none of it has worked that way. This is when it came out for back testing and so forth. Excuse me. And so we didn't even make halfway through, which would be 140 area. Kind of weak. To me, is no signal. We were not high enough for these guys to put a position on. So if this pops now, that would be a surprising signal. Given where we are, I don't know. But no signal right now. When there's no signal, you'll see, and also on a newsletter, we say, no signal here. But not every chart is going to give you a signal. Not all charts are going to give a signal all the time. Okay? No indicator is going to be good all the time. There's just, you got to realize that. You're playing the odds, what I call preponderance of evidence. Hi, Greg, how are you, sir? Hi Jack, how are you? And the reason is this: it's a civil case. It's not criminal. It's not beyond a reasonable doubt. There is no such a thing in trading. It's a preponderance of evidence you have to go by. And so when one chart is not giving you a signal that week, that time, that day, okay, pass. Go to the next chart. And then at the end you count. You do a scoring. Do I have enough signals or not? So Treasury yields. Well. Yeah, these are coming back. This is not good, guys. This is not good. Yeah, I think the Fed will do. I think the Fed will do 75. Ani may disagree with me. I'm not as expert as he is, but I'm thinking that they're going to come with 75. Of course, there's nothing this month, just a symposium next 2 days, but September will be there, and I don't know exactly what day that is. Let me go to Federal Reserve quickly. Federal Reserve banks. Okay, hold on. And monetary policy. Meeting and calendars. Okay, what do we got here? Murray, what do we got? September 20th, 21st. Okay, so it's going to be before. Yeah, oh, I got it. You see that? 25th is Rosh Hashanah. So 21st is the next meeting. Makes it here. Rosh Hashanah is on Sunday. Holy macro. Oh, yeah. Oh, geez. This is getting set up. Yeah. That's my guess. I could be wrong, but that's my guess. All right. No worries. I get it. So, yeah, this is rising. Remember, some of these bond vigilantes, they're coming in because they don't want the Fed to be behind. In the meantime, back at the ranch, the front end, which the FRB has control over, is upticking. So this is the I think how many years we go back here? Hold on. Oh, that's we're going back 3 years. So that's the all-time high for 3 years on the 91-day discount rate. Yeah. So we're going there. Remember, you got to compound that 4 times to get equivalent bond yield. Anyhow, moving forward, TD. All right. Murray. Yeah. I don't buy this. Hold on. 459. Oh, it hasn't opened trading yet. Okay. Q is August. August is gone. August is gone, Jack. Yeah. August is out. So it's going to be U. Okay, I got to fix this. Sorry, bad. That's why this doesn't make sense. Sorry, guys. My bad. Yeah, we got to go to long U contract, which is SEP, and then short Ds. It's a floor discussion, floor name for contract. So should be long September, short Ds, which is a Z. That's September. I mean December. Let's see what we got. Okay, that makes a lot more sense. Okay, yeah. Basically, this says we were at the low. Yeah, it says we were at the low, and then it rallied up a little bit. Now it's dropping. Yeah. Yeah, if he hits 0, then the low is put in the market. So we're not there yet. Yeah. Okay. A little bit not priced right, in my opinion. A little bit. Okay. I don't know why, but that's as of last trade. Again, long U, short Z. Okay. It's a 3 months, the 3-month spread. Okay, let's go here. All right. SPX, we look at SP2, a stock RSI. First of all, we had a fairly good rendezvous point. Why? Look how many times they touch each other in the same area, about 90%. So now the move down starts. We're not going to be done until these 2 lines catch up. This is my 2-chart Chan day. I just program it. The code is open. I just program it in TradeStation. And we run 3 of them so that we can decipher the different timings, short, medium, and long term. But when they get together, you have a rendezvous point, and this was a weak one. But and then look how it pulled up. So we were going up. This was a big one, and this was very big. This was very big. This was right coming into. That was right before Comrade Putin going into Ukraine. What a savage person! Incredible. Anyhow, all right. SP2. SP2 is my favorite indicator. Collaborated with Stan Harley on this, and then he gave up on TradeStation, so I had to finish it myself. He didn't code. He didn't know how to code. He was actually a TARP guy, not the TARP you know. Tactical Air Reconnaissance Pod. Back to the F-14, looks like AWACS. Security clearance, TS, SCI, yeah. TARP, you'd have to have SCI access. Highest level, yeah. Very, very interesting guy. Went to Texas A&M. He was president of MAST. That was his VP, and then he quit. It was a bad divorce. He asked me to take over, and then I got stuck there for 10 years. But it was some of my best 10 years. I learned a lot about the market. I got to know a lot of key players. Some of them got involved with me later on in my book, so on and so forth. But anyhow, the bottom line of what this says is that it looks at some internals of SPX. I'm not going to get into detail. Some internals of SPX and tells you the short-term cycle. And this was done in 1998, I believe, or 99. I have not seen anything to hold up this long. Over 20 years. And when it bounces off of here, it says, for time being, we're pulling up. So depending how this is doing, that's where I usually pick my actual trade of my bias. Remember, I have a bias with TradeStation, with Time and Digest, and then, by the way, I got an email back from them, they recorded it. So they're still in business, but their website is not running, and they're not ranking anybody. Now we're approaching 2 years. But I'm still adhering to the rules. They're keeping track of it, and we can keep track of it ourselves. Here's the performance. Hold up. So you can see when we put a chart up, how that works. Hold on 1 second. Huh? No. Hold on. Okay. There you go. Come on. Sorry, guys. There we go. Okay. This is a chart we put up. Okay. That shows where we are. This is us, all-time high. And here's the market. Okay. We've been short from August 19th. We're up over this period of time. Since November 14th. That's when we changed our code. Some of our indicators, and we structure it like this. We start publishing actually as a newsletter. Actually we didn't charge anything for the first 6 months. We're at all-time high, and this differential is 91%. If you go back over the years, you'll see we've beaten consistently 10% over S&P. Sometimes it was a lot bigger. Look at COVID. We owned it. It's huge. What's huge? But then I messed up a little bit, but now we're back on the setup. Of course, this is dropping. Now, where do we go up when the market is short? Yeah. Why? Because this is a buy and hold, or buy and hope, as I like to call it. You buy and hope S&Ps. This is what the SPYs and Vanguards and the Fidelities of the world will tell you. We don't do that. We're strategically long and short. And you can see the end results. How do we keep track of it? Like this. Every time we make a call, there's a position, and then we mark it to market. We haven't done today yet, but we will. It gets that, and you can see the differential and add it to overall, and gives them statistics and so forth. We take that chart and we post it. It's on the website, it's on Twitter, and so forth. Okay. But remember, this area, is this 98? Yeah, this area, this one. So 2018, we nailed that. Of course, it was COVID, made us time of the decade. So the 10-year prior, from 2010, way back here, to 2020, which was last issue, Tommy Dice reported, we beat everybody like crazy. You have the results, you know what we did. I think the next guy was up to 50% of what I'd done. Now, how did that happen? 2 trades were extremely well. And we were extremely lucky. Does it mean we're that smart? No. That says we have to try hard, that's all. And have due diligence, that's all. But I'm grateful. This has been a great country. I am grateful to that. Okay, we have some calls. We still hold on VIX. We came back up, big day down today, but you will see what happened on the channel. If I come back here and go to weekly, and you probably get the shock wave features much better. There we go. That's what I want you to see. These are the shock waves. Do we have one here? No, not yet. Will we have one? I think in October we're going to see one. Unless I'm dead wrong. So remember, I was off a little bit in June. So all the way from April saying that. So 2-3 months ahead. We came a few days off. So, but that's my feel. If I'm wrong, I'll share with you first. Make sure you're on the emails. Yeah. Okay, up and down. This is Larry's. We post this on Admiral Tico. If you don't follow Admiral Tico, I suggest you do. That's my dog. He is the cleverest dog we've ever seen this side of Mississippi. Okay? There we go. That's him. And he's got about 1,370 followers. And he posts charts, including this chart, about a couple of times a day. And so he's been good. He's been good. He also handles our all of our PMT activity, the emails. Yeah. All right, what are we getting here? No signal. We got signal at 90% or higher, or negative 90 and lower. None here right now. We almost touched it here. Okay, so no signal here right now. Okay, the buying power index. We just went long here on ES. Oh, Murray. The buy here has held on the mid caps. RTY. It's got a little buy, it's held on, but big, and it's done okay. Decent retracement, yes. We're short on NASDAQ. Okay, Murray, we're short on NASDAQ. So that's where we're actually, that went in Monday afternoon. I'm sorry, Friday. Friday coming into Monday went short. This is not my work. I gotta say that. This is not my work. This is my work. I'm sorry. Both of these are Larry's documentation. You'll find it here, right there, that one. Must read. Click on that, and you want to read this. We're actually hosting it. It's Hamzei Analytics host because we want to have people read that. I was privileged to know Paul Desmond, and again through our user group in LA. He's done tremendous work. I think he's passed away recently. I work for Larry Research. These two are from his work. I quoted this one because I always had a up and down ratio there for volume. I wanted to have a more flexibility, and Larry does offer better flexibility. The buying power index is also from them, but this was quoted by my favorite chat room moderator, Peter Cook. And with his permission, I'm using it here with you guys. And actually, I made it a little bit better. And now we both of us are using it. But majority, 99% of the work, 95% of the work was done by that. And the trick is these are data. These data series come from TradeStation. And I don't think other people have it. So we were lucky it's there. As you know, TradeStation has now by far beaten everybody in terms of charts, in terms of data, in terms of back testing, so on and so forth. By far, they are the Rolls Royce of the industry. And I just don't want to be involved with any Me Too product anyway, like TradeView or this or that. And can you do this on ABKR? No. The problem is the support. I'm not doing it interactive. I'm not doing TD Ameritrade. TD Ameritrade provides no security anyway. No good programmer or system designer would go with them anyway, because they don't secure your files. So what's the point of putting it there? But TradeStation has been steady and resolute from day one. And I've been privileged to be with them for about 25 years. And I learn every day today. Between me and our programmer, we have done tremendous work on the 4.67. starting from 4 points, from actually 3.0. If you actually go there, you would see the history of it right here. You'd see what we have gone through. There we go. Right there. Actually, August 16th was the last year. This is when we started the first day of writing the statement of work. On the 19th, we released 4.7, which gives dialogue boxes. That gives you a chance. By the way, if you guys come into the class tomorrow, to the open house tomorrow, please make sure you download and take a look at the user guide. Okay? We have a number of issues added to better teach you what you need to do on what we're trying to do and be in sync with us. Notice the number of exits have changed dramatically. We don't need as many as we had. Why? The value added, the DMZ, the 4.6. Yeah, that changed the ball game. And here's what we've added recently. These. If there's something wrong, you get a dialog box. It pops, tells you, you're doing this wrong, you're doing that wrong. Okay? It's important to have those. It reduces the need for team viewer and saves you from calling and saying, I really don't know if I've done something wrong, but can I talk to you? Well, here you know what you've done wrong and you cover immediately, because as we get more busier and busier, I have less and less time to do team viewer. I have to schedule it. I've got to do it when we're not in a heavy market action and or after hours, and that's just all inconvenience for you. Here, at least some of the basic stuff is responded back to you. Our push was to get this done. Why? Rollover. Contract rollover. We do not allow you to roll over anytime you want. You got to follow the CME rule, which is a Friday. So let me give you that date right now for you. It's a Friday. I'm sorry, it's a Sunday after the second Friday of the month. So it's going to be on the 12th. So Sunday night we roll on the 11th. Because the second Friday is 9th. 16th is the expiration. We roll on the 12th. Used to be a day before. They decided to do it on Sunday. And we have locked it. So you cannot get in and have a wrong symbol on and have different results and then come back to me what happened there. How do I know what happened there? You know what I'm saying? Yeah, we have too many people now. So we just have to make it more rigid so that we all move in concert with each other. Okay. All right, we've done that. One more chart for you. And then I'll take your questions. Okay. This is, I come to this chart often. This is, you can run yourself from stock charts. What you need to remember is this. Alpha, SPX, $ SPX Alpha, 200 Romeo. And there's some stuff down here you can adjust. I usually like to see 5 years. It used to be only 2. It used to be 3. Now they've gone to 5. You have to hit update. And you could see what happened here. Okay? You could also see what happened in late May. Late May came, and look what happened in mid-July. Late June. Late June came, and the big buy signal was after that, right after that. Even though we dropped a little bit lower, look how it pulled up so fast. And look at the separation now between the two lines. You can adjust it. It's 20 and 10. I think default is 10 and 20. I would go to 20 and 50. 20 and 10 is too close. You want some separation, you could see it. And you could see the lows. You could see the lows really nicely. And you could see early warnings. Look, we were going up. This was going down. It said we're going to drop massively, and we did. So, okay, you can run that yourself. Now, is this updated? Yes, it is. It just must have been updated because it's 6:05. Yeah, it just updated. Overnight, what are we doing? Hold on. Overnight, there's overnight. So remember, NVIDIA reported, and we're up actually 21 handles here on the NQs, 7.25. Actually, Ani, correct me if I'm wrong. NVIDIA report was not that good, so maybe it was priced in. So we'll see. But that's where we are. Any questions for me? Again, this is reported. It will go and be posted once we're done here. It takes about half an hour to do post-processing, maybe 45 minutes. And we post it right here, our videos, which is our YouTube channel, and gets posted there. Again, I'm sorry I missed last week, but you didn't want to hear me. I was not in a good shape. Yeah. So I was what they call discombobulated. Yeah. When your oxygen drop, things are nasty. Any questions for me, ladies and gentlemen? Anybody awake? I didn't tell you. This could be a cure for insomnia. Yeah. This webinar. Okay, again. Yeah, you're awake. Okay. So don't forget tomorrow. Come into HA. Go through if you wanna come into the chat room for the trading system. There's no charge. It's free. We won't even take your email. Come to members, except you don't have to log in. You go through this link, enter here. And this is the reason we did this compared to the webinar mode. So it's not, you don't need to, you don't even need to sign up. You come in exactly at that moment. And also the chat room is exactly the same. Why? It was creating an interference for existing members. All of a sudden they go from the go-to-meeting format into go-to-webinar format. And things are different. And you know what? We need to trade. We're busy. Now, I won't take questions immediately. You need to look at the user guide. User guide is posted here. We'll remind you in the morning if you come in early. User guide posted there. Yeah. Right there, user guide. You can see it. I will post it in the chat room for you there to print out and read. I suggest you do it tonight. I'll stop when I'm flat to take questions. There are chat room moderators who will help you if we get stuck somewhere. But please, I need to concentrate. Arnie, what's going on? Here's a question, a good one. Okay, let me read the question out loud. Thank you, sir. Do you expect us to try and retest 42, 4300 given month-end post-Powell? No. That would totally no. That would totally negate what I'm thinking, but you have to be open to it. Now, let's say we do 4250, okay, and lower, that sigma level. You see that sigma level? If that and lower, I'll take that. Then that's the M. And with the lower on the second side, then we're going to drop, yeah. But let's say if it goes above 1 sigma, which is right now stands at 4250. Remember, we got to go over that date, what the value is. But let's say we're going sideways. Let's say all things being equal. And this is the end of a month. And we hit 4250 and go higher, no, invalidates. Then I'm wrong. Yeah. So, as a matter of fact, once I put the trade on for PMT on the option side, most likely that will be my stop, 4250. Because I'm not going to sit there and take the blows. No, it's not worth it. You learn over trading that you don't have to make all the trades. Perfect. But you take the winners, you have a stop for the small losers, and then you'll find. But make sure your stop is regimented. That's reasonable. But that's what we look for. Now, if it takes, let's say, 44,000 out, then we're really going. Look at the other side. Negative 2 sigma is 4,000 almost. By the time we get there, it will be 4,000. Look at where the 50 bar is. Now, but look at the shape of the 50 bar. Look at the slope. So there's a lot here could happen. There are different scenarios. Of course, I talk about it in the chat room. I talk about it here with you guys. We'll have another webinar next week. Also, guys, I want to do one more change. I want to do one webinar on the weekend. Some people are not going to be able to get in, especially on the West Coast. They're working. It's not easy. So one webinar out of the month will be on the weekend, like on a Sunday before the futures open. Because once the futures open, I'm busy here with our systems and so forth. But we'll do that. It would be 2 in the afternoon in LA or San Francisco. It would be 5 Eastern, but that gives a chance for those people to ask questions. Yes, they can listen to the webinars on the YouTube channel, but they can't ask questions, and it's not fair. We have a lot of clients on the West Coast, or what I prefer to call left coast. We have a lot of people there, so we're going to give them a chance to ask questions. Any other questions for me? Again, it will be posted here. And tomorrow, you come here if you like to go look at NQ and MNQ. There are going to be a lot of people there. A lot, yeah. And we're going to do, I haven't decided what I'm going to do, but for those who are in attendance, we'll probably throw in a couple of specials. Maybe give a special price for the first month. Why? It's end of a summer, and you also need to learn. You need to learn. Yeah, the first month is a little neat, but one time you can't keep coming use that first month discount. But I think we want to do that. Give a little bit of a time off so you can understand what's going on. The system pays for itself. Not a question at all. Not a question at all. All you have to do is take a look at some of the trades. Was it that day we made 17,000 in 2 hours on 3 NQs with $12,000 margin? It's 17,000. So, but that doesn't happen every day. Yeah, that was a non-farm. I think it was December non-farm. Yeah, that was for no. Actually, no, it was November non-farm report in December. That was one. A couple number of them at 12,000, 11,000. Of course, come to October and November, 5,000 and 6,000 will be daily. Why? Well, I told you. Earnings season. Just the craziness of the tug of war between the hedge funds, and we just sit back and relax and collect. So, welcome to America. Exactly. Any other questions for me? Okay, guys, I'm out of here. Thank you for coming. We'll see you soon. All the best.